How's everyone doing? Ken here from the Dyslexic Investor here. I'm back again, and we're going to be actually looking at two different things today. We're going to be looking at the Bollinger Bands and the Kelter channels, and these are honestly like the more generic things that when you start reading various books about trading and trend trading and following trends or trend changes, these are some of the things that you'll hear a lot about, and just wanted to kind of go into details on how they look on a chart. And the one that we're currently looking at is the VIX. And what the VIX is referred to as many different things. It basically just tracks the volatility within the S&P 500 and so forth. It depends on which variables you look at, but it's also called the fear index. There's quite a few other like ETFs that are like a multiplier of it, and you can kind of go down the rabbit hole with that. But we're just going to look at VIX up here on top. Again, here on the daily chart right here, highlighted. Again, each candle here is 1 day, and this is a whole full year that we're looking at. First and foremost, this is the Thinkorswim platform that I'm using here. I actually use Thinkorswim to do all my charting and alerts, and then I use like a Robinhood or a Tastyworks to execute my trades. So the blue part, the blue highlighted, I guess you can call it a teal. These are the Bollinger Bands. These expand or consolidate when things happen. So for example, you can kind of see here in this little period, let me highlight that. I can do a cool little square for like in this area here. You can kind of see, oh, messed that up. Wanted to do the box. Where's the box? Let's do a circle. This area, okay, what the heck? I don't know how to use this. Draw, yes. There we go. That's terrible. Well, anyways, this area here, you can kind of see here that everything kind of consolidated in a sense of having things coming. Both the blue, again, the teal is the Bollinger Bands, and the Kelter channels coming in, compressing. Ideal meaning that it could more likely it could expand and if it bounces off one of the bottom or top bands, it could be a sign of breaking out or breaking down. And for again, in this case, if you guys remember of this was last year, beginning of October, whenever the Fed chairman and the Fed were saying that they needed to raise rates, and of course that caused a lot of fear and running to the door. That just made the volatility index spike up, and this is one of my like more simpler trades that I like to do and look at, potentially sizing in or seeing a big move kind of coming. Again, nothing is like for sure on if something bad's gonna happen or something good or whatever. Like you just never know because no one can tell the future. No one has a crystal ball to be able to predict the future in the market. Not even the richest people in the world. But there are some indicators and a little bit of a lagger to kind of tell you on what might happen. And this is basically the setup of technical trading. All right, so you see that happened, and you see it pierced the blue teal line. And usually after it pierces it has to, if it closes above it, it means it's a very strong sign if it closes above the teal line, meaning most likely the following day it's going to go higher. And you can see that here. So this day on the 10-10, it closed above the teal line, and then you got another big spike almost a 28 the following day, which that's a significant move in the VIX. This rarely happens. To give you some look back, let's look at 15 years. So this is 15. This is each little. This is a month. Each of these little guys are a month, and this is we're just talking. Here's 2018, 2019. Of course, you know exactly what happened in this area here in 08, 09 when the VIX hit almost 90 points, which is absolutely bonkers. Honestly, like you can see, it's how bad, like if it pierces it, it went higher, it pierced it, closed it again, and then it started coming down. These reactions usually don't last very long. You can see it's only basically 2 or 3 months. Basically, this is a very rare circumstance where it lasted from September of '08 all the way almost until like the following summer of '09, where the VIX was extremely highly elevated, but you can see it trending down. And that's what I wanted to jump to next. On once it pops up and pierces the line, it's using a lot of energy and a lot of kinetic energy to blow through that. So to be able to blow through that, it's got to rest and it's got to come back down. Usually, this yellow dotted line is like the middle, the middle of the channels and so forth. So when it punctures through the Bollinger Bands, more or less, if it starts slowing down, losing gas, its most likely position is to come back near this dotted medium line. And again, if it closes above it or below it, depending, you see here it closed below, it's most likely going to go lower, and so forth. And then bada bing right here, it touched the channels again, we got another kick up, and it went right in here to the middle. It's not an exact science like this is going to happen every single time, but these are just like the edge that you can create within your trading to kind of give you a better understanding of what's happening, and not running to the door when everyone else is selling. This is some of the opportunities that I've seen is the best to buy stocks and different various things that you have on your watch list. Right, and then you can see here that it consolidated, went back down, losing a little bit of gas. Boom, it punctured it again, and then it went flying up again. Conservatively would have been here, but it went through, punctured through the top part of the band, came back, went back again to the middle, and then from there took off. And this was that huge sell-off we had literally a couple days prior to Christmas, when everyone was trying to sell their positions before the end of the year, and just the craziness of that. Then after that is usually a big sign that this was very highly elevated. So we kind of look here more like on a weekly chart. So if you remember last year, or 2018, we had that sell-off due to the non-farm payroll numbers on that February, where I got creamed at. I did not. That was a heck of a month for me, doing very well in January, and then basically giving it all up in February, just in like a matter of 2 or 3 days. So that has re-energized my understanding and looking at the VIX on how to look at. You can see here that we again punctured the blue line, closed below it. So conservatively, we should be going to touch the middle here, if not the middle, down to the bottom. But again, you can see here it's consolidating. It's inside the Kelter channels. Usually when it's inside the Kelter channels, it has a more probability of exploding up. Not always up. It can always just fizzle out and continue to go down. But you can kind of see here, like the low that's been in the last year, it's been 10.17, and we're only at like 16.5. So it's not too far off from that, but the likelihood of all this news coming up that from China deal might not go through, Brexit, all that jazz, is likely could cause a little bit more fear in the market, and we could get a little bit of another push up here in the VIX. But what I most likely will be doing is looking at seeing if it can hold this middle line. If not, look at when it touches the bottom here, and kind of continually to look at that for a potential buying opportunity with some stocks or options. Again, thank you everyone much for watching. This is Kenneth, the Dyslexic Investor. You guys have a wonderful day. Catch you guys later. Peace.